Hi everyone, my name is Mary and I'm talking about the Euro US dollar again. I think that this particular pair is going to have a lot of potential over the next couple of weeks because it looks fundamentally and technically as if a lot of things are going to change. And right now we've got the monthly chart pattern, which is still showing a wolf wave pattern. This hasn't been negated yet. This is still a bearish pattern unless it breaks out and were to go above a 150. So that still fundamentally looks like a very unstable chart pattern. And weekly you can see here that it's a rising bearish wedge. A wedge like this, which is narrower at the top, is a bearish pattern. And then on the daily chart you also have what looks like it could be a diamond top forming. This is a diamond pattern, which is usually bearish when it comes at the top of a trend, just as well as it's bullish when it comes at the bottom of a trend. So those are three patterns to keep an eye on for this week. And then we also have charts that are showing on the 4-hour. It shows that it was going from early in April a rising channel to now what's like a flat channel. And we're also seeing a cross here on the 8-day ARSI crossing below the 23-day ARSI, and we're also seeing what looks like the RSI trending downward. So, and then we also have the Ichimoku, and it looks like right here it's going to begin to start a bearish cross. So there are a lot of technical patterns I'm looking at right here, and also the news for the next couple of weeks is going to be very important because we've got the Fed meeting on the 26th to the 27th. Now this could very well be the Fed meeting at which they indicate that they're going to begin to end the quantitative easing. And the program was 85% complete. As of the beginning of April, they had purchased $523 billion in securities. And their schedule shows that they plan to purchase another $97 billion up until May 11th, in which case they basically should be complete. What they're going to do after that, they may signal to us at the next meeting. But since the main report that came out last week and the last couple of weeks from the Fed was the Beige Book, and the Beige Book actually was very bullish when it talked about employment. It said that labor market conditions were generally stronger than in the last report, and it shows that there's manufacturing growth, it shows that there's growth in industrial sectors. It showed that some of the employment agencies that they have surveyed showed that they have had the best month in the last few years. So the main factor that the Fed has been looking at is employment as well as price stability. And as long we've seen 200,000 jobs created over the last 2 months with the employment reports. So as long as that doesn't begin to show another big downward trend, then I think it's probably very likely that the Fed is going to switch to a neutral stance and end their quantitative easing program. That's basically what the rhetoric has said. They're probably going to complete this last series of purchases and then wait and see what happens after that. So we've got that, and then we also have the situation in Europe where the bond spreads for many of the European peripheral countries have taken a big jump up just in the last month. And the Portuguese bond spreads went up from 3.1% last summer up to 5.793% on April 1st, and then 7% in the secondary market just last week. So we've seen a lot of real concern about these continuation of these European bailouts, and there are a couple of bond auctions to keep an eye on next week. There are some Portuguese short-term bond auctions. There are going to be 87-day bills and 206-day bills. Those won't be as important as the longer-term auctions. The real auction to keep an eye on is going to be on the 20th, the Spanish 10-year auction, because of course you have this short-term paper which is basically guaranteed by the ECB and the European Financial Stability Fund. But when you're looking ahead 10 years down the road, then the investors, the institutional and retail investors, are going to start looking at the likelihood of them being paid back at par and earning a reasonable yield over 10 years, which is much longer. And it's a chance there could be a lot more uncertainty about the 10-year outlook for some of these countries. It's also interesting to look at the fact that the euro made a big move down against a lot of other currencies in the last week. And the euro Japanese yen made a big move down. The euro has been moving down against the commodity currencies like the Australian dollar and the New Zealand dollar. And the fact is that the euro US dollar is really one pair that's kind of lagging that's happened over the last week. The euro US dollar hasn't made it as much of a big move down as some of the other euro pairs. That's why I think that it probably has more downward potential at this point. So next week might be kind of a slow week because it's basically 4 days in the market, and the following week has the Fed meeting. So I always kind of plan my trades as much as, a week or two in advance. I'm always kind of looking to see what's the next big move going to be. And I think the next big move is going to be down in the euro. So I'm going to try to look ahead and see if it does have another spike up above 145. I think that's probably going to be another good area to short.